Hello and welcome to the Right Mortgage Network's Later Life Lending podcast. We're here today with our guest, CEO of AIR, Paul Glynn, and myself, Head of Equity Release at the network, Victoria Clark. Paul, welcome to the podcast and thank you for joining us today.
Thanks, Victoria, and thank you for having me.
And the topic of today's podcast is the Comprehensive Conversations Movement. AIR's manifesto, which was brought in this year, underpins an ongoing movement using education and advanced technology to empower advisors, lenders, networks, and professionals to provide diverse consumer-focused options. The Right Mortgage is proud to be signed up to the manifesto and wish to continue to work on the growth in our later life lending industry with AIR. So it's great to have this topic of conversation to share with our members today and dive into it a bit deeper. So leading me on to our first question and to get started with the podcast. So Paul, what are the fundamental principles underpinning the comprehensive conversation movement and why is it so important for later life lending?
Thanks, Victoria. It's a good question and definitely a good place to start. I think this is a journey we've been on since our conference last year, where we're looking to support, with the help of the likes of yourselves, our partners and joint member firms, get to grips with what was consumer duty implementation at the time, and it became quite clear that firms did need support around product details that are out there, what the journey needed to look like, and that all-inclusive start point on not ruling products out at the start. And I think we've done quite a bit of work on how we support firms through that process, and that was really crystallized in some of the regulator feedback at the back of September, where they were really clear that firms should have the ability to try and leave as many products as possible in scope through the advice journey as possible. And the only way to do that really is by putting affordability up front and at the heart of the process. So AIR has been working quite hard on how we build tools and how we build wider marketing narrative in the background that supports advisors having a comprehensive conversation about how much customers can afford to pay. And that's the right way for advisors to then be able to keep all of the products options open for as long as possible in the journey, to then make sure that customers end up firstly in a non-equity release product if that's the most appropriate thing for them, and then secondly, if they do end up in an equity release style product, that customer really understands the impact of the cost of borrowing over time in the roll-up interest environment. So AIR's been working really hard to create that narrative as a backdrop that firms should have that comprehensive conversation, not just on affordability, but on things like health as well, to keep products on the table for as long as possible. And then if advisors do that, even where they are not licensed to write equity release, and it's within each firm's right to say they want to operate in a narrow band if they don't want to operate in the equity release space, that firms should either expand their advice offerings to be inclusive, or if they don't want to, then they should build referral pathways for customers where it's appropriate. And that's equally relevant for firms that are equity release specialists as it is for those firms that are mortgage specialists.
That's it, and AIR are making it just so easy, aren't they? Like to have that kind of easy look through everything, make sure you've really gone up and down the ladder through it all. And that's why it's so great for people to have so many partnerships, and AIR are doing a lot to be able to support people in that. So it doesn't matter if you can't do it, it shouldn't stop you from investigating it. And yeah, AIR are just really producing all those tools, aren't they?
Yeah, the navigator tools are a key part of that, which lets a firm challenge a customer in the right way through the advice process on how much they want to pay. That's where the value of the advisor is really crucial, because that might mean that the right product set outside of equity release is what appears for the customer through the process. Or if they do want to take advantage of some of the features in the equity release space, such as security of tenure or other things, they're very clear on the benefits of making payments in that environment, on keeping the cost of borrowing down over time, and being in a position then to preserve the estate for as long as possible.
Yeah, and it's just everything about evolving the consumer needs. It's just really important because people are living longer, they're working longer, they can make payments. It shouldn't be so quick to say that you can just have it rolled up from such a young age. So, how is the later life lending sector, both in terms of products and advice, adapting to the changing needs and circumstances of customers over 50? Would you say, from your point of view, overseeing it all from your position at Air?
Well, having that conversation is really important because the landscape now is getting more complicated. Um, and the needs of customers are getting more complex. So if we deal with the customer first, if you think of a customer who typically took a mortgage out pre 2000, it's quite likely that the further before 2000 that mortgage was taken out, the customer will have been in a traditional planning phase of take their mortgage out mid 20s to late 20s, have paid it off mid 40s to late 40s, and then there's a bit of space left for an accumulation for retirement phase before they then start decumulation. And what has happened post 2000, I think partly because of the way that house prices have risen so quickly compared to wages, and the multiples of income to property price are so much bigger now, is you're now seeing customers who are getting into their 50s and they've still got quite a lot of the loan left to repay. um, More people are taking out mortgages later, and they're taking out mortgages for longer, often beyond retirement age. So those needs are becoming more complicated. So the product environment needs to adapt for this, and the advice process needs to adapt for it. So what we're seeing in the product space is now more customers that were on the mortgage end of that spectrum, the residential mortgage end of that spectrum, see interest rate pressures and cost of living pressures mean, they can't afford, some of those terms, and that there's a lot more, as you'll know as an organization better than I do, that there's a lot more product transfer business being recommended in that type of scenario. And then in the equity release side of that spectrum, where there's no repayments, you've seen post Liz Truss, you've seen a lot of the higher LTV products withdrawn. So customers can't always get the LTVs they need in the equity release space. So you've got a lot more customers now falling into a gap in the middle where they desperately want to try and find a solution, and they're working with their advisors to do that. But the market now needs to create products that, if customers can pay something on a regular basis, so it could be a scenario where a customer is paying £400-500 a month, can't get to £600 or £700 a month, so they're not at interest only type payments, but they're in a product transfer scenario. Then, if with the help of the advisor they're able to pay something, what you'd hope comes forward in the product design, and we've definitely seen it now in the equity release hybrid style space, is where they can make some payments, they get a reward in the product design, either in the form of a discounted interest rate or they get additional LTV. So we've seen great products and innovation come from L&G, come from Standard Life Home Finance, and more recently come from Water Life, where you either see discounts or enhancements in LTV, where the advisor is working with the customer on what they can afford to carry on paying contractually through that period, to then bring some of those hybrid type products into play. And the discounts or the increases in LTV can be quite substantial. It's Air's.
Yeah, and even from our point of view, that it's so positive to see. We've seen so many people take them up on this. So even like with the Standard Life product, for example, people have been straight onto it, seeing the need and being able getting the discount to the customer because they can make payments. And it's just so great that having that kind of bit of encouragement has really been taken up by advisors, which just shows they are prepared to take the full look at everything. So yeah, it's been really well received our end as well.
It is really exciting because it's helping customers that perhaps those firms didn't feel they could help previously. Um,
Yeah, no, and giving them more options and things like that, and especially at a time when, last year was tricky for some advisors. So coming into this year with so many more tools being added to their belt is just a really positive start to the year that's just going to hopefully continue to keep going to fruition as we go out and go on throughout the month. So yeah, it's been a great start to that. And obviously it's great to see how much Air is kind of in the pushing with that to make sure that more providers are coming out with more to be able to help customers at the end of it, really, and the advisors can help them along the way. So with that, how are affordability-centric and product-agnostic strategies being embraced across the later life lending sector to benefit the older borrowers? So what do you think we're really doing? I know we're giving these more products available, but do you see more coming in for higher loan to values or things like that? Or do you think we're going to be focusing more on making payments for those customers? But I'm just thinking about that group of people who still can't make payments.
It's increasing in the number of people who are using those products. What's really encouraging is we made some changes to sourcing back in towards the end of January. And from a standing start, we're now seeing probably 1 in 5 of our sourcing sessions use the new fields that ask, how much a customer is prepared to pay and commit to over time and for how long. That then means, advisors on 1 in 5 sourcing sessions are having those comprehensive conversations. I think that then means that those products surface in the research and will properly be included in that conversation with the customer. I think where it gets equally exciting as advisors use tools like the Navigator is once they've got to grips with where those products really fit and the good they can do for customers, it's then taking those conversations and those tools into their introducers and their wider mortgage partner businesses where and part of their own operations where they then look for those style of customers. So it isn't necessarily the traditional equity release customer that they're used to, where it's someone who was in that kind of pre-2000 style mortgage situation where they're asset rich and cash poor and the property is likely to be unencumbered, and equity release is a way of supporting them through retirement. That's still a really important part of the market, but it's seeing advisors now go through that phase of understanding the new products, understanding the customer personas, and then supporting partner firms and their own firms look for those customers in what would have been traditional later life lending scenarios outside of equity release. And AIR is trying to make it a little bit easier for those advisors to be able to compare traditional equity release with voluntary payments, with discounted interest, hybrid style new products, with contractual mandatory payments to see a higher LTV increase. And it's a really difficult job for the advisor to try and compare all of that manually. And we're trying to make that easier with some of the changes that we've made, where someone can genuinely look at paying £200 a month into a traditional equity release plan on a voluntary basis compared to £200 a month into a mandatory payment product. So yeah, it's complex needs, but we can help more complex customers. But this, the product at the end of the day is advice. Advisors do a great job for customers. We just got to make it easier for them to spend more time looking for and with customers on the advice process.
Yeah, and I think that's the thing, isn't it? It's just like you say, it's exciting. It's exciting that people can have these options. There's becoming now. It's less of a thing really now to be just a traditional equity release advisor who only deals with their certain types of products. People have to branch out because it's important, and they've got to look at the affordability. With the Consumer Duty last year, we brought in looking at bank statements and making sure that at least one bank statement was always taken. So for those kind of older extra release advisors who have been around for years and years, well, it's not about that. It's like, well, you've got to move with the times now. So having things available to make it so easy for these people who were probably once very stuck in their ways, but they're not, they're able to be given the tools to help them to move into it, to be able to look at everything for their customers, and to be able to give their customers that reassurance that there is a product available if you can make some payments. But at the end of it, you've still got an equity release. Your house is still guaranteed that you're going to be getting a lifetime mortgage at the end of it. It's not the scary option of going into another fixed term with a mortgage and then, we'll see how it goes when you get to the end of that. It's giving somebody the full lifetime planning, which is what it's all about, isn't it, with our industry. And it's great to see, I think, more going into saying later life lending rather than equity release, because there's so much more to it then extra release. So yeah, it is exciting. I don't know, there's probably not loads of people who think this is such an exciting topic, but I agree with you, Paul. I think it really is, and it's really nice to know how many more people can be helped with that. What I want to kind of flip it on its side a bit is, so obviously we are still facing some challenges as well across the board. So with the major challenges we're being faced in the later life lending sector in today's economic climate, the market environment, the fact that house prices, as you mentioned, have gone up so much, but they're staying as they are at the moment. We've got maybe the Extra Release Council are working with us, but they're still the Extra Release Council. It's a lot more that needs to be done, I would say, to be able to support everything. But what would you say are the major challenges that we can help address, and also potentially, if it's not now, in the future, what more can we be doing?
I think it's probably worth, there was a brilliant article, I think, recently from Robert Sinclair at Amy, where I think Robert quite rightly called out that, firms should be able to shape their businesses within, regulatory boundaries as they need to. So if they want to operate narrowly, they should and can. But he talked about the need to support firms think about holistic advice in the context of knowing enough to be able to signpost. So I think for me, as this market gets more complicated and the needs of customers get more complicated, I think working together on how we help advisors do that signposting with tools, with access to tech in whatever way is needed, and education. So it is going to be really important. So AIR have launched an affordability module, for example, to help advisors navigate, who haven't been in that space for a little while, navigate the way through the things they need to think about and the changes that will happen. And we got to remember, I think, that advisors are a pretty resilient, group of people.
Definitely.
Fluid, changing client circumstances, and we've got shared members that we both know will move heaven and earth for a customer, and if that means getting to grips with a new product and a new process, we know they'll do it. We've just got to put everything there at their disposal. That means, one, they can identify those customers, and two, they can spend time driving great outcomes for those customers. And for me, it is helping them understand that persona work. This is transformational for people's businesses if we get this right, because I think we did some work with some of our own members recently, where looking at their mortgage business, just being able to support their advisors where they're working really hard, where quite a substantial proportion of their mortgage customers, when they review them each year, go into product transfers. Just to be able to have an advice-rich, affordability-led conversation that might identify that some of those customers could be helped with the new products, it is transformational for the way those businesses operate and the revenue it generates. But more importantly, it means that they can put that money back into client acquisition, which is driving better numbers of great customer outcomes off the back of it. So there's a massive opportunity here to help a group of people that are really underserved in terms of advice, get access to that advisor conversation. And then secondly, if it's a comprehensive one around affordability, there's a massive spectrum of products out there, not just from the equity release lenders, but there's more and more innovation coming from the wider later life lending space as well, which puts more tools at the advisor's disposal.
Yeah, and like you said, when you're mentioning that as well, with the extra education that AIR does, it's still encouraging, which we're very much an advocate for, getting more people to look into lifetime mortgages, later life lending space. Like, all advisors, in my opinion, should be able to look at everything. So getting that kind of education, that it's one thing taking your qualification, but there's so much more to it than that. And having things available on AIR, like with all the training and the online things that you can be a part of. Obviously, we've got in-house supervision, but having those extra tools available as well, it's like having that, no isn't an option for a customer. You want to be able to look at everything you possibly can. And it seems AIR follow that same ethos as well of, it isn't no, let's see what we can do. How can we help? Let's get involved in that. So that's a really positive as well, isn't it? With having those you guys are continuously working on the education side, aren't you, with your online testing?
Yeah, which is a good dovetail for the work that as an organisation you do on business support and compliance support for members. So, I definitely think when you put those two things together, people should be looking to embrace as part of their planning for the next 2 to 3 years these new product sets. And also think of generations of advisors now coming through from mortgage qualified capabilities and mortgage experience into wanting to see later life as a natural skill set. Business expansion, we're building things all the time that will make it easier for people to do that, whether that's induction courses through the academy, or whether it's the wider work we're doing as a trusted partner with the LIBF. We're going to try and make it much easier for as many advisors as possible to come into this market and support as many customers as possible.
And that's it, because they're coming from a place, other mortgage brokers, where they do know affordability. They've already been working with bank statements for the whole time they've been doing mortgages. It's just then applying it to older borrowers and being able to help them as much as possible. But obviously still thinking about those extra release advisors who are also just learning new things by getting involved in affordability, but they could then also start to look at normal residential mortgages, if that's the thing, to be able to do it. It's just being able to educate everybody as much as possible, so can really look at all avenues to help their customer just for as much as they possibly can, really. And it just really gives them the ability to, obviously helps them get more business as well, which is important. Obviously it's important to help the customer, but the advisors also being able to stay current and be able to get more business, which is also very important, because the whole situation with lead generation is important, but you can generate as many leads as you can, but if you don't know what to do with them, that's where you're going to have a next stumbling block, isn't it? So, but I know Air do a lot to be able to support people with the lead generation side of things too. So that's really important.
Yeah, and we've got a marketing and insights hub that helps people who want to generate a sustainable vein of business in the later life lending space. So I definitely recommend people taking a look at that part of the website and estate to get any ideas that and to support with planning. I think the other piece, probably again worth revisiting, is that navigator tool, because it is definitely designed with 3 types of user in mind. One, because it's so simple to use, and 2, it also it fits into either being used pre-fact find, because that could be used by an introducer wanting to qualify later life over 50s mortgage customers into whether they should signpost them to an equity release specialist, or it could be used in parallel with the fact find by an equity release specialist, or by a mortgage advisor in the same way, where it should identify for the equity release advisor where a broader product set should be in play, and then for the mortgage advisor where the equity release product set should be in play, just by asking some simple questions around affordability and income and expenditure, some preferences around the things they're looking to achieve throughout the advice process. And it does a good job of signposting where different product sets may be worth exploring, but it doesn't do the job of the advisor in terms of that rich conversation as part of the wider process with the customer. But it acts as a brilliant audit to say, 1, that income and affordability conversation has been had. 2, once you've generated the PDF, all of the things that were captured in terms of the customer's own words. And then 3, it does do a good job in terms of, if advisors want to use it with their introducers, it's a really good qualification tool for that handover for the lead. So I would recommend people don't just think about it in the context of their own processes, but in really training their introducers to be able to use it properly with their customers as a way of signposting referrals in this new environment. Definitely worth a road test as to see where it would fit.
No, that's a really useful tip as well for people, isn't it? Because it's extra things like that cost nothing. It's just taking that extra step, talk to your introducers, educate them as well, using things like the tool. It's so simple. The navigator tool is so simple. So all of this kind of ties up so nicely with everything that we've got going on. So we've obviously got the future plans this year of, we are in the change at the moment of choosing change to a new CRM system for us at the network, and we're also going to be, hopefully, fingers crossed, by the end of the year, going to be integrated with Air within that system. So it's just going to be really great for our advisors to be able to very swiftly produce their fact finds within our CRM and head straight to Air to be able to use things such as the Navigator tool, then do their sourcing, then do all of the benefits checking, all within one place, and just really working in partnership with Air for our advisors to have a really swift process throughout that. So really there should be no reason why not to be able to actually use these extra tools, which will help lots of steps along the way. But just lead me on to as well, just want to make sure we discuss this before we finish. So very exciting, you guys have your summit coming up at the start of June, don't you? So if you want to tell us a bit about that so we can share that with our members too.
Yeah, thanks, Victoria. It's one we're really looking forward to. So we've got conference at Silverstone Circuit on the 13th of June. We've got a variety of different topical plenary sessions that we're running. There's some masterclass workshops that cover things like lead gen, that cover some of the new product sets and personas in where they fit in the market. And there's an Air pit stop which will cover all of the tools and the sourcing changes and wider plans we've got for the Air proposition that we'll be able to take advisors through on a one-to-one basis. But we're really trying to make it a worthwhile day for people who are looking to meet multiple lenders at once, build CPD, and get some new ideas on the way that the market's going to be driven, not just from the traditional equity release lenders, but we've got a number now of other wider lender partners that are looking to exhibit and participate in those debates. So we're hoping it will be quite a different style of day than what we've been used to from Air before. It will be a real build on the things we've done in previous conferences, but what we hope will be a real value add to people who want to make the day and invest the time in traveling down to Silverstone to meet everybody.
Yeah, and what a venue as well. So really, if there's just a chance to go to Silverstone, and I hear as well you're getting a Formula One driver as a guest speaker as well. So that's exciting.
Yeah, under wraps at the moment, but
Yeah.
there's a guest speaker that will be, again, hopefully an entertaining and insightful end to the day. Because conscious that advisors will have invested a lot of brain power and concentration into that attendance in the day. So a light-hearted and topical end to the day. But Air's talked in our marketing program about safer tracks for the last 12 months or so. So it's all about making, even though we've picked Silverstone as the venue, it easy for advisors to run on their advice tracks using Air tools. And it's great, great to hear, as you've said there, that you're investing as an organization in technology, and we will do everything we can to work with you to make it as easier and slicker, but more importantly, safer journey on those technology tracks going forward, Victoria.
No, and that's brilliant. And we obviously, it's great to be able to work together. And that's why we really encourage our advisors to attend these Air events as well, because even though it's not from the network, you're mixing with other peers, you're getting to know so much more about what's going on in the industry, getting to hear from yourselves at Air, who are actually not just dealing with equity release now, it is later life lending. You've, like you say, you've got everybody there. So yeah, we really encourage our advisors to get to go to learn more one day out, to really get to know all the ways you could be, let's say, on the safer tracks for your customers, and ultimately be able to help your customers, help yourself, help your business, diversify. It's just, yeah, all round great one for people to be able to get in there for the education. So that's everything from us for today, I think, Paul, but thank you very much for joining us on the podcast. It's been really great to go through all of these different things. I know there's so much more that's going to come from this year, and I'm really looking forward to see how the next half of the year presents itself. But yes, thank you very much for joining us today.
Thanks, Victoria, and thank you to you and your members for all the support that you've given Air this year. And I look forward to seeing what happens over the next 12 months.